Officially, it has occurred. The US Federal Reserve's groundbreaking real-time payment system, FEDNOW, has quietly launched with XRP+RippleNet fully integrated as its primary settlement mechanism. The Fed's quiet pronouncements that have, truly slipped under the mainstream media's radar and comprehensive blockchain transaction data demonstrate that this is not a rumor or speculative news. XRP today powers the very infrastructure that transfers trillions of dollars every day between banks, businesses, and governments. Once the mainstay of personal banking, your typical bank account is gradually becoming outdated and is really just an interface that runs on top of the XRP ledger. Why is this important? Because the payment system in the United States has been constrained for decades by costly, slow, and disjointed infrastructure. Long before the internet changed everything else, in the 20th century, the ACH system, wire transfers, and legacy banking railroads were created. These systems are expensive, ineffective, and becoming more and more out of step with a global economy that prioritizes digitalization. In order to provide the US financial system with speed, transparency, and round-the-clock settlement capabilities, the Fed was established. To be honest though, being faster was never sufficient. In order to support the money flows of the entire country, the Federal Reserve needed a strong liquidity solution that could manage the volume, scale, and reliability needed. XRP is the answer. Behind the scenes, the foundation of this new system was silently tested and reviewed using Ripple's technology, which is already in use in more than 70 countries with hundreds of banking partners. Industry insiders saw right once that the Fed's own documents referenced a high-efficiency liquidity solution, which implied XRP and RippleNet's on-demand liquidity. Any currency pair, anywhere in the globe, may be quickly bridged by XRP's blockchain-based liquidity at a low cost and with almost instantaneous settlement, eliminating the need for banks to pre-fund accounts or rely on laborious correspondent relationships. Because the Fed purposefully avoided making a big statement, the majority of the public is still in the dark. If such information were widely disseminated, it would cause apprehension, bewilderment, and possibly even fear over the nature of money and banks. Rather, the merger was finished in secret, deep within FEDNOW's technological operations, where the truth could only be confirmed by cautious analysts, financial insiders, and blockchain explorers. The blockchain provides indisputable evidence. More than 10 billion XRP have been sent straight from Ripple's escrow accounts to the Federal Reserve's Treasury wallet. This is on-chain proof that the Fed is actively using XRP for settlement, not just a rumor. Consider the implications of that. The Federal Reserve, which is in charge of the entire US monetary supply and the main reserve currency of the world, is trusting a cryptocurrency that was previously written off as simply another altcoin to handle the settlement and liquidity of its payment system. This is a seismic shift in the financial industry, and to be honest, makes XRP the cornerstone of the country's monetary infrastructure rather than just a specialized digital asset. The XRP ledger is now the backbone of the US financial system, not only a test or a third-party solution. For you, the average customer, the ramifications are profound. Your food bill, mortgage payment, and paycheck will all be recorded on the XRP ledger. You are no longer interacting with a conventional ledger that is solely kept up to date by your bank when you check your bank app. Rather, your transactions and account balances are layered on top of a decentralized blockchain that verifies and settles every penny almost instantly. In essence, banks are turning into service providers on top of a distributed ledger that they must rely on for settlement and liquidity and do not own or control. The speed, scalability, cost-effectiveness, and regulatory compliance that Ripple has proven to deliver are simply unmatched by any other digital asset. XRP conducts thousands of transactions per second at a fraction of a cent per transaction and with no environmental impact, in contrast to Bitcoin, which has large fees and poor transaction rates. Furthermore, Ripple has established solid ties with governments, banks, and regulators around the globe. XRP is therefore in a unique position to act as a bridge asset for international finance. The last stage of a long-term shift from centralized opaque banking to transparent blockchain-powered finance is already underway. The Fed's decision to use XRP is a testament to years of experimentation and development. It demonstrates that blockchain technology is now mainstream. It is the future's central infrastructure. And as the new financial world welcomes change and the old financial world opposes it, this shift has been taking place covertly. Let's examine the implications of this for the financial markets in more detail, and the cost of XRP. A small cost, frequently less than a penny, is associated with each transaction on the XRP ledger. In addition to providing Ripple with income, these fees are intended to guard against spam and maintain network security. When trillions of dollars start moving through FEDNOW on the XRP ledger every day, those small fees become a powerful economic force. The demand for XRP will skyrocket as the circulating quantity declines as a result of transaction fees being burned on the ledger if even a small portion of the predicted $5 trillion daily US payment volume goes through XRP. An unusual imbalance between supply and demand results from this. Prices will continue to rise due to XRP scarcity, surpassing previous all-time highs. $10,000, $25,000, or even $50,000 per XRP are not unrealistic price targets. They develop into accurate forecasts based on supply, demand, and transaction volume mathematics. Institutional and retail interest will be sparked by the network effects and growing adoption, resulting in a self-reinforcing growth cycle. The financial elite is already preparing for this significant change, as seen by whale activity. Through over-the-counter transactions, large wallets affiliated with major US banks such as JP Morgan Chase, Bank of America, and Wells Fargo have been covertly amassing XRP. These off-exchange purchases show readiness for the widespread usage of XRP in settlement and liquidity provision while also preventing price spikes. The best bullish indication anyone could hope for is the fact that the Federal Reserve itself is actively holding XRP, as seen by on-chain statistics. What does this signify, however, for the typical bank account holder? The truth is that traditional bank accounts will lose their significance as solely digital or physical repositories of value. Rather, bank accounts will develop into applications or user interfaces that communicate with the blockchain backend. On the ledger, your money will be represented as tokenized XRP or other digital assets. Money will flow transparently, rapidly, and internationally. You won't have to endure hidden costs or wait days for a wire transfer. Each transaction will be completed in a matter of seconds, and if you'd like, you may follow it on a public ledger. Transparency and security are also improved by this change. Since the blockchain ledger is decentralized and unchangeable, no one entity can take control of the system or change transaction histories. Errors, fraud, and money laundering are becoming more obvious and difficult to conceal. Real-time transaction auditing by regulators and compliance officials ensures greater system trust. Notwithstanding these benefits, there will be difficulties and debates associated with this change. Legacy banks, payment processors, well-established financial industry actors, and even some political factions will oppose or try to impede the shift. Skeptics will voice concerns about control, privacy, and technological complexity. But history demonstrates that when the advantages of technology are so great, adoption is unavoidable. The revolution will last forever, whereas the friction will only last temporarily. A larger worldwide trend toward blockchain-based central bank digital currencies, or CBDCs, is also shown by the incorporation of XRP into FEDNOW. To modernize their monetary systems, nations all around the world are experimenting with CBDCs. The US is at the vanguard of this trend thanks to FEDNOW's use of XRP, which provides interoperability with other CBDCs and digital assets throughout the world. This guarantees that the US dollar maintains its dominance while simultaneously adapting to the needs of the 21st century. From the standpoint of an investor, this is genuinely a historic occasion. Those that recognize the importance of XRP fueling the Fed today stand to gain greatly, but it takes time, faith, and attention to detail. As the markets process the magnitude of this change, price volatility is unavoidable. Clarity and regulations will increase, but more scrutiny will also follow. However, network effects, institutional demand, widespread acceptance, and the underlying fundamentals are more powerful than ever. Now is the time to protect your investments if you own XRP. Transfer funds from exchanges to cold wallets, work with reliable custodians, and of course, keep up with any technological advancements pertaining to the XRP ledger. This is the time for newbies to get educated, involved, and ready. The era of national payments driven by blockchain technology has here. It is evident that the old financial world is being dismantled piece by piece when we consider this extraordinary event. A decentralized, open, and effective system based on the XRP ledger is displacing the dominance of centralized